Welcome back to Investing Talk Podcast. Today we're jumping straight into the sources for an intensive look at the pharmaceutical giant, Pfizer. And the big question we're tackling directly from the material you shared is pretty straightforward. Is Pfizer a good buy right now? Before we get into it, just a quick reminder, please subscribe, hit that like button, and definitely leave a comment below. Also, if there's a specific company you want us to analyze in a future session, please let us know in those comments.
Yeah, Pfizer is a really compelling case study at the moment. They're clearly in a recovery phase after, a tough 2024 with falling COVID revenues. But our sources are painting a surprisingly positive picture. They support a strong 8.5 out of 10 overall bullish rating.
Wow, 8.5 is high conviction.
It really is. And it seems driven by this rapid convergence of fundamental shifts and some positive technical signals. So let's maybe unpack the numbers first, the ones driving this turnaround view.
Okay, let's start there. That turnaround story. 2024 felt like the bottom. It certainly spooked investors. But these 2025 projections seem worlds apart. What's the revenue and earnings data actually telling us about their health now, and maybe more importantly, the speed of this comeback?
Well, the stabilization isn't just hoped for. The data implies it's already underway. Full year 2024 revenue landed at $58.5 billion. But look at just the first half of 2025 revenue hit $30.2 billion. That run rate, it signals pretty robust annualized momentum building up.
Okay, so the pace is picking up.
Exactly. And management guidance for the full year 2025, they're backing that up. They project revenue somewhere between $60.7 billion and $67.4 billion. But the really core story here, the thing that probably justifies that 8.5 rating, is earnings per share, EPS.
Right, that's always the key for valuation.
Yeah.
So what's the consensus saying for their earnings, and why such a big improvement from last year?
Okay, so last year, fiscal 24 EPS was $1.35. The consensus projection for 2025, it jumps way up to $3.13.
Oh, that's a massive leap.
It is. I mean, that translates to a projected growth rate of 121.7% year over year.
121%.
Yeah. And just for context, that absolutely blows past the median growth rate for the rest of the big pharma industry. And this bounce back, it seems it's not just about cutting costs, though that's part of it. It's really driven by the expected growth in their main non-COVID product lines, plus some pretty aggressive company-wide cost savings they're putting in place.
Okay, that projection, 121%, it feels incredibly optimistic, almost aggressive. Is there one key thing that, if it doesn't happen, completely throws that number off?
Oh, absolutely. It really hinges on the strength of their core branded drugs, specifically expanding their oncology pipeline and, the continued strength of vaccines like Prevnar. If any of those big non-COVID lines hit unexpected market share loss or, say, a patent issue pops up, then that $3.13 number gets shaky real fast.
Makes sense.
That said, the balance sheet looks like they're prepared for some bumps. As of Q2 2025, they were sitting on $16.97 billion in cash and short-term investments. And importantly, their liquidity looks great. Their current ratio, basically assets they can quickly turn to cash versus debts coming due soon, is a healthy 1.26. So that suggests plenty of flexibility.
I see the debt side, though. $35.4 billion in long-term debt. That's not insignificant. How secure does that make their overall structure?
For a company this size, it's actually quite secure. Yes, the debt number is big, but their interest coverage ratio is 3.31 times. Meaning they can cover their interest payments more than 3 times over with their earnings, even if those earnings took a pretty big hit. So it confirms they have a very flexible investment-grade capital structure, and that's crucial for backing that big dividend and any future moves.
Okay, so moving beyond the quarterly numbers, what gives Pfizer staying power?
Yeah.
What's that competitive edge, the moat as they call it, that lets them sustain this recovery long term?
Their moat is really built on just massive global scale and deep intellectual property. Pfizer is, a recognized leader globally in key areas. Vaccines, obviously. Oncology, with big names like Ibrance, and cardiovascular, mainly through Eliquis. Competitors just can't easily copy their infrastructure or their, deep regulatory experience or the market access they've built over decades.
It's a whole package.
Exactly. And their brand strength gives them global reach, which is vital for diversification. What's interesting now is that emerging markets are contributing 40% of total sales. That's a big chunk.
40%? Wow.
Yeah, it reduces their reliance on any single market or regulatory environment. It's a key long-term stabilizer.
That makes a lot of sense. And for many long-term investors, that stability and scale often means, income potential. Given the cash you mentioned, what's the story with their dividend?
The dividend. It's definitely a major draw, especially right now in this recovery phase. and it's well supported by cash flow. Their trailing 12-month free cash flow is sitting at $10.19 billion. That easily supports a pretty generous forward dividend yield of 6.81%.
6.81%. That is exceptionally high for a blue-chip pharma company.
It really is. Puts them right near the top, sort of top quartile for large pharma yields. Plus, there's history there. The company just declared its usual $0.43 per share third-quarter dividend. That marks their 347th consecutive quarterly payment.
347.
Yeah, it's a track record that screams commitment to shareholder income. And that provides, really essential downside support for people holding it long term.
Okay, so fundamentals improving, strong income story. But stability alone doesn't spark a rally, right? We need catalysts, immediate triggers. What makes this a now situation for someone maybe looking at it more tactically?
Right. Well, the calendar has actually been pretty packed with positive news lately, and there's more coming up. We saw a momentum build after the Q2 2025 earnings beat that immediately reaffirmed their guidance for the year, which was important. Then we got two big pipeline wins back to back. Late August, the FDA approved their next-gen RSV vaccine. And then in September, positive phase 3 results for their new oral GLP-1 diabetes candidate. That's a big one.
The oral GLP-1, yeah, that's a hot area.
Very hot. And they also recently finalized a significant agreement with the U.S. government about lowering drug costs. Now, while that might suggest some pricing pressure, it also shows they're being proactive and maybe takes a layer of regulatory uncertainty off the table.
Okay, so zooming right into the near term, what specific events are on the docket for Q4 2025, say the next 3 months, that could really move the needle on the stock price?
The immediate focus is definitely the Q3 2025 earnings release that's scheduled for October 31st. Investors will be watching that like hawks to see if that 121% EPS growth story is still tracking. Beyond earnings, we're expecting regulatory decisions on additional uses for major drugs like Prevnar and their Eliquis combo therapies, probably in November and December.
Okay.
Then there are the macro level things. You've got significant institutional events like ETF rebalancing around mid-November and the big reveal of institutional buys around December 10th. When a stock is trying to break out, like Pfizer seems to be, those institutional flows can really add fuel to the fire.
Right, the big money moving in.
Exactly. And finally, pipeline updates. We expect more news late in Q4 on their antiviral program and, of course, more details on that crucial obesity and diabetes molecule.
Got it. Let's switch gears to the charts then. The fundamentals sound promising, but is the actual price action, the market itself, confirming this optimism?
It seems to be, yes. Pfizer closed recently around $27.08. That's after a strong bounce off its 52-week low, which was way down at $20.92 back in July. And crucially, it broke through resistance at $25 back in September. That level, $25, now looks like pretty solid support. That's often a key psychological shift for traders.
So moving from just recovery into maybe a defined uptrend, what are the technical tools telling you?
Well, the price action does suggest that transition, from accumulation into more of a breakout phase.
Yeah.
It's currently trading above both its 50-day and its 200-day moving averages. That's a classic bullish signal.
Okay.
Momentum indicators look healthy too. The RSI, Relative Strength Index, is around 61. That shows good upward momentum, but it's not yet in that overbought territory, suggesting there might be more room to run.
It's not overheated yet.
Doesn't seem so. And the MACD indicator, another momentum tool, it crossed bullishly back in mid-September. That generally points towards strengthening buying pressure.
Yeah, let's talk about the smart money and maybe the rumor mill. Analyst consensus is still just hold, but you see these high-priced targets, like $45. How do you square that conservative average view with such a potentially explosive upside?
Yeah, that gap is interesting, isn't it? The median target, around $28, that's likely based on the current confirmed business, factoring in the known risks. That high target, the $45 one, that's almost purely based on the potential payoff from the pipeline, especially that oral GLP-1.
Just a what-if scenario.
Exactly. Analysts are basically saying, look, if this GLP-1 hits big, the whole valuation story changes dramatically, almost doubles, potentially. And we are seeing some positive institutional action that suggests interest in that upside. Big funds like BlackRock, Vanguard, they increased their positions in Q3. We saw net institutional inflows overall. Even insider activity showed some modest net buying in September. So the money seems to be slowly, cautiously following these positive catalysts.
And what about the whispers, the unconfirmed buzz? Beyond the known pipeline, what sort of speculation might be adding to the interest?
Well, the biggest buzz by far is around that potential early 2026 entry into the huge obesity drug market with that oral GLP-1. That's the potential blockbuster everyone's watching. Beyond that, there's sort of persistent, though unconfirmed, talk that Pfizer might be looking at smaller bolt-on acquisitions, maybe in oncology or immunology, just to further strengthen their revenue streams against future patent expirations.
Right, that brings us neatly back to the risks. We need that balanced view. That $45 target depends heavily on the pipeline working out, but big pharma always faces pressure from expiring patents, right?
Yeah.
What are the key risks, especially those patent cliffs, that investors need to keep front of mind?
That's definitely the most critical long-term challenge. These patent cliffs, where a major drug loses exclusivity and cheap generics flood in, they can wipe out billions in revenue almost overnight. Pfizer is constantly under the gun to innovate and execute on R&D to replace that revenue.
Which drugs are most vulnerable soon?
Well, looking out towards the second half of this decade, key revenue streams from oncology like Ibrance and cardiovascular drugs like Eliquis, they face significant loss of exclusivity or pressure. So any major delays in R&D, or worse, a clinical trial failure for one of the drugs meant to replace those,
So,
yeah, that could hit the valuation hard.
and what about broader sector risks? You mentioned the drug pricing agreement, but what other headwinds could squeeze margins, even if the pipeline delivers?
The biggest sector risk is always regulatory uncertainty, isn't it? Specifically around drug price reform in the U.S. Any big legislative push, say, allowing Medicare to negotiate prices more broadly, or even increased ESG scrutiny affecting manufacturing or supply chains, those things could directly pressure margins on existing drugs. These are sort of macro risks that even a successful pipeline can't fully protect against.
Okay, so pulling it all together then, we have this major income stock yielding nearly 7%, a solid balance sheet, this aggressive, maybe optimistic 121% EPS growth forecast. What does this all boil down to for you, the listener, considering Pfizer right now?
The final picture really supports that 8.5 out of 10 bullish rating, I think. Pfizer seems to offer sort of a dual opportunity here. First, there's potentially attractive tactical upside, maybe over the next 3 to 6 months. That's because of this really dense calendar of potential positive news, the Q3 earnings, those regulatory decisions we talked about.
The near-term catalysts.
Exactly. But second, it also looks like solid long-term value. Its market leadership, its resilience, and that very, very reliable dividend yield. It makes for a strong entry point if you're seeking stable exposure to healthcare growth trends. And you get paid pretty well with that 6.8% yield to wait for the pipeline story to play out.
So income now, potential growth later.
That seems to be the thesis. It feels like Pfizer's pivoting, from being the COVID giant back towards being a more diversified powerhouse focused on long-term value creation. The really critical thing for you to watch now is whether that oral GLP-1 candidate can actually deliver that next multi-billion-dollar opportunity. If it does it stay a value stock, or does it suddenly look like a growth stock again? That feels like the key question defining the company's next chapter.
That is a fantastic question to leave you mulling over, especially as you watch those Q4 catalysts unfold. Thanks for joining us for this analysis today. We really hope this information helps you become a more well-informed investor. Remember to hit like, subscribe, and please do let us know what company we should look into next time in the comments below.
Until next time.
See you soon.